The information shared is for educational purposes only. Before taking any action, please seek the advice of a financial or tax professional.
Hi, my name is Ron Yaish with SpecialNeedsLifePlanning.com. So here we are on the Ohio Able Account website. You could find it by going to stable account, STABLE account.com. And what we're going to do today is we're going to actually do kind of like a walkthrough. We're not going to get into all the details of Able accounts. For that, we have a webinar that you could sign up for. It's a free webinar down below. And there we go into the benefits of the Able accounts and a little more detail. Today, we're just going to kind of peruse through this website, give those individuals that are considering opening an account with the Ohio Able program, kind of like a walkthrough, not an inside perspective, but just make it a little more familiar. So when you do want to come here, you know what you're looking at, and you can get some of that insight. Okay, so the program is supervised by the Treasury of Ohio. They have a little bit about the accounts, the benefits, the eligibility, and the qualified expenses. So the stable accounts, they have nationwide enrollment for individuals with disabilities, which is good because there are some programs that are just for the residents of their state. So this is a nationwide program, which is very nice, especially for those individuals that don't have access to an Able program, right? We know that not every state in the union has a program at this point. Stable accounts give people with special needs more independence and financial security. Before we get any further, just wanted to make mention of something I usually say before we begin. Before taking any action, trying to figure out whether the Able accounts are for you, how to benefit from them, it's important to seek some professional advice, some financial professional advice, so that you can determine if this is a good idea and how to go about benefiting from that without compromising some of your benefits. Okay, what are the benefits? Tax-free earning, financial benefits not affected, and stable accounts. So here it says some limitation, subject to some limitations. What that means is each program has a different balance maximum, right? Balance limit. I know I said maximum. Scratch that. So you may have a limit of 400,000, 500,000. How that works, that's really established by each individual state. The purpose of this account is to give individuals that are eligible, individuals with disabilities, the ability to save some money and to grow that money. The problem is that what you don't realize is that just putting your money in this account doesn't mean everything's okay, right? If you are receiving some Medicaid or SSI benefits, you have to be careful that the balance of this account doesn't go over $100,000. The minute it goes over that $100,000 mark, your benefits that come from SSI may be compromised. So please realize that. Usually get the classic question as to, well, why is that so if the balance is much higher? There are individuals that may not be getting SSI or and may need this account for any number of reasons, but that's beyond the scope of today's walkthrough. Who is eligible? Okay, so it's nationwide eligibility. I always like taking this quiz. I've taken it before on other sites. Okay, so you may put $15,000 per year into an Able account, and that could be by you, the individual with disabilities, could be by other individuals, friends, families, anybody really can contribute. As of December 22nd, 2017, the law has changed that now allows individuals with disabilities, if they do work, to take some of that money, up to $12,060, and deposit that into an ABLE account as well. Even though that has been established, right now, I don't believe there are any states that have put that into action. So that is something that, as you see here, is coming soon. Okay, you have various different choices for investments. When you put the money into the account, you could choose an FDIC insured option, right? It's FDIC insured up to the balance of $250,000. And you can make changes, twice a year. Bring myself up here. Okay. So the money is in the account, right? So what can I spend the money on? So it needs to be spent on a qualified disability expense. What is that? Okay. So that is expenses that, benefit the individual with special needs that is qualified for this account. Okay. With the ultimate purpose of improving their quality of life. So for example, if somebody needed extra training, that would be something that would be good, right? If they're looking to get a job or, get a job coach and get a little more of that support, or if they needed to be a member of a health club locally, that would be something that would be appropriate, right? It's going to benefit the individual. If the monies that come from this account go to something else, like going to send, a good friend on a cruise, that would be problematic because that's not what the funds are in the account for. That's not what the government has been, supporting, and the reason why they passed this legislation to allow individuals with special needs to save money. It's not to spend on other people, but to spend on themselves. Okay. We do have a resource. We do have a good resource below for different aspects of what makes up an ABLE account. One of them is a qualified disability expense report, just to give you a little bit more on what these expenses can be like and examples. Again, it's not exhaustive, but it definitely gives you a better idea of what types of expenses are appropriate. And the other thing we have as part of that resource down below that you can click, we do have a PDF and an Excel spreadsheet that you can download to keep track of your expenses. Now, it's important to note that right now there isn't a way for somebody to approve an expense. There isn't anybody officially overseeing, requesting this expense. There isn't an audit system in place. So regardless of that, it's best practice managing an account that has that is a responsibility, whether it's for by the individuals who are qualified for this account themselves or other individuals that are helping them with this account. One should be keeping track of the date of the expense when this check went out, who it made out, who the money went to, how much what money was for, and the purpose of this expense. So that that is something to keep in mind, and you can get access to that down below in our resource guide. So we have the expenses, and if you have any questions, you could reach out to the team over in Ohio. This is their number. You can email them. They will feel comfortable asking questions about their plan, right? There's going to be a line drawn between, is this plan good for me? Is this right for me, my child, my friend, the individual I'm trying to help? Is this good for us? I don't know if they're going to be able to answer that, right? They can answer about the plans. Just like if somebody called me up, right? I wear another hat as a wealth advisor. I work with a number of families who who have children with special needs. And those are the questions that we talk about. What are your goals? What are you trying to accomplish? Does this account make sense for you? I understand them. I know what they're looking to do. I understand their risk tolerance. That's something that in that position is appropriate for me to engage and to respond and to give them guidance like that. But for somebody who just emails us and saying, I want a question about the Ohio ABLE plan, we can answer questions about the plan, but we won't be able to give you personal advice because that would be inappropriate. As to, I believe, the Ohio team would have that same approach. Okay, so let's jump in. Learn more. Again, we're not going to go into every detail, every aspect of these ABLE accounts because that's not the plan for today. But we are going to jump around a little bit here. Okay, if you are an Ohio resident or a Ohio taxpayer, okay, there is a difference there, right? Theoretically, if you have a business in Ohio, even if you're not a resident of Ohio, you may be considered a taxpayer, but I'll defer to the team in Ohio to answer that. If you're an Ohio resident or taxpayer, you can take a state income tax deduction of up to $4,000 per stable account you contribute to. So each grandparent, as if there were 4 grandparents, right, and they each contribute to a stable account, right, they could each get a $4,000 deduction. Or if there were 4, grandchildren and the grandparent decided to contribute $4,000 into each stable account, right, this grandparent would get a $16,000 deduction, right, $4,000 per stable account that they contributed to, with unlimited carry forward. I'm not going to deal with that now. I found it when I explained it before. It really becomes confusing in this venue. You can email us a question about that and we'll respond personally to you. This means that if you contribute more than $4,000 to a stable account in a calendar year, you can carry the remainder of the contribution forward to subsequent years until your entire contribution has been fully deducted. So I thought they were referring to something else. So if you contributed $4,000 this year, you can take a deduction, $4,000 for this year and $4,000 for the next year. Other states may also offer income tax deductions or credits for stable account contributions. Please check your state taxation agency or financial planner for more information on your state tax benefits. Which is why when somebody comes to me, when I'm wearing the other hat, as a wealth advisor, as a financial advisor, we want to evaluate, right, which plans are the best for you. If you live in a state that does offer a deduction or a credit, very often we will encourage an individual to consider that plan first. Obviously, we want to weigh out the flexibility of the plan, the types of investments, and the expenses. We look at everything, but it would make sense financially to get involved with a plan that is in your own state, on top of, which is always an added benefit to supporting your local agency, which is important. Okay. Keep your public benefits. Okay. Okay. Stable accounts. They're telling you about the $100,000 limit. Please don't go over that. There is something called a stable card, and this is kind of like a debit card. Again, for the right individual who's looking to work on this as a life skill, this is an added bonus. This is a great way to utilize that. It's also a MasterCard partner so that you can use it wherever MasterCard is accepted. This is not a plug for MasterCard. This is just something I'm reading here. Okay. Eligibility. Okay, this is more general. We're not going to get into that. Okay, this is nationwide availability. We like that. Who can open up an account? Okay, and saving and investing. Okay, so there are different options that you can consider for the portfolio, stable portfolio. There are 5 different investment options. A growth option, you would have to click, to see if you want to understand what moderate growth option beyond this description. You can click here and get into that. We're not here to judge what is better for one individual or another. Okay, but this is the breakdown. That actually takes you to the Vanguard site. Okay, and you have a FDIC insured up to $250,000 option, and to learn about the current investment performance, you can click on that. Check that out. Why not? Now there is a difference. Okay, there is a difference actually for those that are Ohio and partner states like Arizona, et cetera, all these states that have one price structure, and those that are not part of this team here, this group, they get a different cost structure. So that is important for you to know. If you're from a state that isn't listed here and you want to participate, there would be a different cost. Who can contribute? Any person can contribute. They do participate in what they call the e-gift tool, which is really neat. It's a good way to let close friends and family members know about this account. What we usually like to do is, mention that people may want to consider a month before the individual's birth date or a month before the holidays or both, to send out a note, send out a letter with a link, with information on this account saying, look, you may be considering a gift. If so, this is a nice option to consider. So-and-so has a savings account, and, you may want to get them something and not compromise their asset limits, right? Because there is a limit for somebody who does receive government benefits. This is a good tool, but you want to make it easy for them, right? So having the e-gift tool is one way to do it. The other way to do it is to include in the email or a note and an attached PDF or what have you, the address of the Ohio plan, the name of the Ohio plan, the account holder's name, right? It's the individual's name, and the account number. So that if they wanted to write out a check or send wire money in or do an online transaction, they can do that. You're making it easy for them. Now, you're not asking for a handout. You're letting people know who would be giving you or your friend or your family member a gift anyway. It's just in giving them an opportunity to consider this as a gift. On a tangent, what do we do when I wear my other hat? One of the other things that we like to encourage families to do is send out what we call a gifting letter. Something along this line that if you want to consider this individual, obviously this would be more appropriate to family members. But if you were considering including so-and-so in your estate planning, please, if you are going to go that route, please consider the trust, if there's a trust involved, or this able account, obviously depending on the amount of money. What wouldn't be good is, which comes up every so often, is that there's a very generous uncle or great uncle who has their special needs, nephew or great nephew in mind. They pass and they've left them in the will, $5,000. All of a sudden it throws their benefits into a tizzy because the money was made directly to them, and it becomes a real problem. But if $5,000 was directed into the ABLE account, that's awesome, right? As well as, that letter allows the individuals who are planning on doing that anyway, do it and, the right way, as well as planting a seed, to individuals who may have been, thinking about their estate, how to map it out, and maybe they would consider this cousin or this, relative in mind as they do their estate planning. So anyway, a little tangent. Sorry about that. Okay, so the contribution limits are $15,000, as we mentioned, per year. You can add the individual, him or herself, which owns the account, may contribute an additional $12,060 of their own income. So the total you can contribute is $27,060. And the limit for the Ohio plan is $462,000. Now, that doesn't mean the money can't grow beyond that. It just means once the money reaches that, Ohio will not allow any additional contributions to come in. That's just the way the system is set up. If you'd like to withdraw money from the stable account, just log in. There currently is not a limit on there is no limit on the amount of withdrawals. Some plans do have limits, some plans don't. This plan does not have a limit, which is great. So if you wanted to, make 50 withdrawals to qualify expenses, that would be appropriate. Just FYI, if there is someone considering a payment to rent or to lease of an apartment or some housing space, make sure that those monies, if they are deposited in your account and aren't made directly to the landlord or to the management company, if the money is placed in your account, it shouldn't stay in the account more than 30 days. If it does, it could potentially create a challenge with your asset limits. So that's something that is important to be made aware of. Okay. Qualified expenses. Let's click on that. You want to learn a little bit more about qualified expenses. In addition, you could check out our free qualified expense report down below. We have a resource guide here. They give you a pretty nice list of just things to give you, an idea of what is okay to spend the money on. Okay, and I think that was pretty. Hold on a second. Let me just go all the way down. Plan disclosures. Let's click on that, and then we'll go to the questions. Okay, the plan disclosure statement. It's there. It's good for you. It has a lot of details. You want to know who the plan manager is. You want to know details. What happens if are there any other expenses, right? So beyond the quarterly expense, right? The management of the account, the quarterly expense. There is the expense for the actual funds. What happens if a check bounces? What other expenses are there? So you can check out that plan disclosure. It gives you more of those details if you wanted to check that out. Okay. Tell you a little bit more about the plan, which we're not doing here. Who is eligible? Okay. You could take the eligibility quiz. We do have a sample document, letter, if you will, down below in our resource guide for those individuals that don't have SSDI or SSI and need to provide some documentation from a doctor. So it's always good to have a sample, something to model off of, and you could check that out. You could download that below as well. Okay, qualified expenses, blah, blah, blah. Okay, I like their question and answer section. It really does cover a lot. So this is the point I was making before. If you're going to pay for housing or rent, make sure not to cross the 30-day mark. Online enrollment is free. You need to deposit a minimum of $50 the first time, and then any subsequent deposits are maybe as little as $1, which is really nice, right? So if somebody gets a $5 check from a cousin for their birthday, they could take that and they could deposit it in this account, okay? Okay, so these are the fees. So we mentioned there are two fees, right? There's the management of the accounts, right? If you are part of this team of partner states, you pay between 0.19 and 0.33, depending on the portfolio you choose. But if you're not and you're from a resident of a different state, the fee's a little higher, as we mentioned before. It's 0.45 to 0.59. And there are administrative fees here, and you pay $2.50 to maintain this account. Residents of other states pay $3.50 to maintain. It's an account maintenance fee. Okay, so there is a benefit to being one of these partner states, which is always nice. And what else? I think that is basically it. There are these 5 investment options. We went through that. And I think that's pretty much it. We're gonna go into open an account just to kind of open the door and show you what the process looks like, how simple it is. Don't know if we're gonna actually get into this one. Let's see if we will. No, we're not going to. Okay. We're not going to create a user ID and a password. Some of them are different. This one, I don't want to create an account. I think it's inappropriate. At some point in the future, I hope to reach out to the team at Stable to get kind of like a demo account, so I could do that. But we're not there yet. And if we do have something, I'll add a link down below. But right now, the link is not there, so don't rely on that. If you have any questions, please leave a comment. We'd love to hear your questions, your impression of this video. We do our best to try to respond to as many of the comments as possible. And if you have questions you want to reach out to us directly, you can reach us at info at specialneedslifeplanning.com. We'd love to hear your questions or your ideas for other things to look into and research. We are very familiar with part of the special needs life planning process, but we're not experts in all the components. And, our goal is to learn about something and then educate others on what we found and what we're learning via articles, via videos, via webinars. That is our mission, right? We're finding ourselves in the position where we're getting a lot of questions and we see ourselves being asked the same questions over and over. So in order to benefit many people and not to just recreate the wheel, we're using this as a resource, specialneedslifeplanning.com. Check us out. Again, our goal is to be there as part of your circle of support, right? We want to be there. Something you need, reach out to us. If we don't know if we don't have it, we can try to direct you to the right place. And, we're looking to become part of your team. Anyways, a pleasure spending some time with you. My name is Ron Yaish with Special Needs Life Planning.
Thank you so much for joining us today. It means a lot that you've spent the time with us. Just wanted to ask you if you could to please subscribe to our channel. It does help us. It means a lot to us. And if you are watching this on the blog, you wouldn't be able to subscribe, but you would be able to put in your email address and join the ABLE Report community. That means when we come out with information, when we come out with our ABLE reports, you would receive it. So please enter your email address if this is on the blog, or click subscribe on right below this video. Thanks so much. Until next time.